Hey guys, welcome back to the channel. Today we're talking about Rivian stock, Rivian, the electronic vehicle and pickup truck maker, and just what's happened to it in the market over the last couple of days or so. So we've seen that its major investor Amazon has teamed up with another vehicle provider that could potentially give Amazon some electronic vans as well as Rivian. So this has been seen as some competition to obviously Rivian's own 100,000 vehicle order, and this has had a pretty significant knock-on on the share price, knocking it down to $90 a share, which is the lowest that it's been since it listed on the stock market not too long ago. This company still has an exceptionally high market cap to as per its revenue, up at over $80 billion, and that represents a significant danger. I really like the look of this company, but there's an awful lot of value to this company, and when you start seeing headlines like this, it's not a particularly good thing, and it is exactly why the share price has been treated the way that it has been. And there's an awful lot of money that is stacked up in this company that at the moment some may argue is unwarranted. So today we're going to conduct some analysis. We're going to look at the good things and the bad things. If you could see your way to liking the video and subscribing to the channel, that'd be amazing. Let's get in there and let's take a look. Hey again guys, welcome into the video. So here we are on Rivian's website page just quickly. Glorious looking trucks, aren't they? Absolutely spectacular. You can see why they've taken over 70,000 pre-orders for these pickup trucks, but they've got to deliver on this, and the share price has taken a bit of a battering because at the moment they're still in the very early stages and they've got to scale that. They've got an $80 billion market cap, but yet which is higher than Ford and GM incidentally, but they're not actually delivering that many vehicles right now. But it is all about the future with this company, of course, but a lot of people will view 80 billion as extremely an extremely high valuation. So the share price came down significantly just yesterday on the back of the Amazon's I can't remember the name of the company, Stellantis deal. Sorry, I'll just quickly pop back to that, which took it down significantly. And bearing in mind this company post IPO went up to $172. If you went and bought in at that peak and then came down, you've lost 50% of your investment, which is very, very painful. The company, as I said, is valued at $79 billion, but it's only delivering a few hundred to 1,000 EVs a year at the moment, which is not going to generate a particularly large amount of revenue. Analysts still have the company valued at between $97 and $170 a share with an average of 134. It's currently 90, so there is, according to analysts, a bit of a margin there for you, but there is a lot for this company to do in the meantime, that is for sure. The reason for the stock plunge yesterday was the news of the Amazon Stellantis deal. Amazon and Jeff Bezos is a key investor in Rivian and has the 100,000 vehicle order for Amazon over the coming years, but Stellantis is also going to provide vehicles now. So one of the key investors is getting in bed with another company. That obviously sends the wrong message to investors, which is why the stock fell as much as it did, 11%, with Stellantis only up 0.3%. They are trying to be ambitious with their goals, but scaling takes time. It is as simple as that, and having an $80 billion market cap in the meantime could mean that this company's share price shrinks a little bit more between now and then. There is obviously the market cap of 80 billion is far less than Tesla's, obviously even more than 10 times less, but at the moment it is 10 times less of a company. Let's be honest right here. I love the product, I'm quite bullish on the company in the longer term, but this share price is actually quite high at the moment, and this is sort of agreed with by Edward Sheldon here from CFA. There is an awful lot to like about this company, there really is. It got the R1T pickup truck, got the Motor Trend Truck of the Year. It has loads of pre-orders from Amazon, but they remain at pre-orders at the moment. Morgan Stanley analyst Adam Jonas thinks Rivian is the one to go ahead and challenge Tesla, and if it could even get the half the market cap that Tesla has, that is a multi-bagging return on investment with the share price at $100 that it is at the moment. However, there are concerns about revenue. Scalability is a big thing. They are going to be a few hundred vehicles short of their target of 1,200 EVs in 2021 due to supply chain and semiconductor shortages, which is affecting every company out there. Let's be fair there. It's affecting Tesla, it's affecting all the other electronic vehicle and the likes of Ford and GM also. But they are going to face significant competition from the likes of Volvo, Volkswagen, Mercedes, Tesla, Ford, GM. All these companies are going to be producing their own. Tesla's the market leader on this, so they are the first mover. They've gone off into the distance, but Rivian is trying to develop its vehicles and sell its vehicles at a time when all the other manufacturers are coming on board, which makes it just that little bit more difficult. The company is going to need to raise more capital in a few years to fund its growth, and this again could potentially hit the share price, and obviously that would involve some dilution as well. However, what I will say is they are sitting on a huge cash pile. So this analyst here says he won't be buying Rivian stock for now. The risk reward proposition isn't there at the moment. There are better stocks for him. I personally think that it's not quite as bad as that. You could take a position, but you need to know the risks involved with it. There's a lot of chat on the StockWitch page about a lot of very disappointed investors because they got in when the share price was in the hundreds of dollars, and it's come down pretty hard since then. And while they're struggling to scale, there is not going to be too many things that are going to act as a catalyst to the share price. There is more risk out there that the share price will react like it did yesterday to a little bit of bad news, wiped 11% of the value off the company just like that, and it's going to struggle to get that value back very easily. So here are some of the good things about the company though. They do have 71,000 pre-orders of the R1 pickup trucks. They have 100,000 pre-orders from Amazon, 200,000 planned annual capacity at the normal factory. They're planning to open another one. They have 3 vehicles certified for sale, 10,000 employees, and 400,000 annual capacity planned for the Georgia facility, but that's going to need some significant investment. Now they are and were sat on a massive cash pile of 2.5 billion invested by Amazon. This article dates back to July the 23rd, so a few months ago, so they will have spent some of this by now, of course, but they're still sat on a significant amount of that. But they're going to need to raise money down the line, and that could potentially dilute out investors, which is never a good thing in theory. But if it gets it to its ultimate destination, then it might be worth it taking some dilution so they can get the capital they need to fund even bigger growth. Tesla has done this in the past, and it's not knocked the share price too much, so this company will of course be hoping to be the same. So they do have plenty of cash for now, but it is something to keep an eye on when that cash starts to dry up. If the revenue isn't significant enough to cover that, then they're going to start looking to sell shares. However, this company does look pretty good. It will succeed, in my opinion, to be fair. It's got a lot of backing from some of one of the world's richest men, one of the world's biggest companies backing it. So there is a significant return to be had, but you're going to have to be in it for the long term on this one. Buying in at the share price that it currently is at is quite a risky move, as it could, some more bad news could easily wipe another 10% off the share price or more. And the catalysts, there isn't that many catalysts out there just for the moment to bring the share price back up, so you need to watch what you're doing with this one, guys. But that being said, I do like the company, and it does have an awful lot of good things going for it. So that was the Rivian stock analysis there. There are some very good plus points to this company, but there's some pretty big negatives at the moment as well. And that market cap is particularly high and could easily fall a lot more than it already has. So it is a very risky move at the moment. I think you need to be very risk adverse when investing in this company and weigh up the pros and the cons, some of which I've highlighted, but of course do your own due diligence as well. It is a great company. It's got some seriously good backing, but there are some negatives to be had as well, so it's up to you to try and work out whether it is worth the risk or not. Hopefully you've enjoyed today's video. If you can see your way to smashing that like button and subscribing to the channel, that'd be absolutely awesome, and I'll hopefully see you in yet another investing episode down the line. Thank you.